Good guys, this is one of the first questions that we're going to do, where we're going to pull everything that we've done this semester together in one question. And usually these questions are either financial statement questions, or we're going to do incomplete records a little bit later on after this subject. And there you will see that sort of everything starts to make sense, what we've done during this semester. So you are provided with the following information regarding Win Big Traders, the financial records as at 30 September 2012. They give us capital, loan, land and buildings, vehicles at cost, equipment at cost, accumulated depreciation, vehicles and equipment, debtors control, creditors control, inventory, bank, petty cash, sales base you earn credit, creditors Afri Pension Fund, there is Creditors Medical Aid Fund, Creditors Unemployment Insurance Fund, allowance for credit losses, allowance for settlement discount, sales, cost of sales, sales returns. Remember, sales returns have to be closed off against my sales at the end of the year. Salaries and wages, employer contributions UIF, employer contributions pension fund. Now, all three of those items are salary and salary related costs. Then we have rent income, insurance, audit fees, consumable goods, drawings, telephone, water, electricity, bank charges, repairs, and rates and taxes. Very important, when Big Traders is not registered for VAT purposes. The following information must still be taken into account. Good. And then they give us 11 points of additional information. Let's find out first, what do they want from us? They want us to prepare the statement of profit and loss and other comprehensive income for the year ended 30 September 2012. So I need income statement. Comparative figures are not required. And then the second part of the question, they want a note to the financial statements for trade and other payables as at 30 September 2012. Now, guys, whenever you get a financial statements question, it is not difficult questions. And what makes it a little bit more bearable is that all these individual information is sort of half and half, 90% of the time, loose standing items. So if you can do one but you cannot do two, it's not the end of the world. You can carry on with the question, because the one thing is not dependent on the other thing. Also, it's not difficult questions, because if you know exactly, you know your work, whatever, you know what entries you have to pass. Now, my recommendation will be, whenever you get a financial statements question, start off with a skeleton. So they want a statement of profit or loss. And you can write for yourself what the statement of profit and loss looks like. I have sales, I have cost of sales. I'm most probably going to have other operating income, so leave a few lines open. I'm going to have operating expenses. You have a number of them already in your trial balance, so you can write it down. And what I would recommend is that after you've written down the outlay, the template of your statement of profit or loss, if this was your whole page, let's say you're going to draw a line there, and on this side of the line, you're going to do all your calculations. And on that side of the line will then be your statement of profit or loss. Obviously, if some of your calculations is going to be a long calculation, you do not want to press it into this little space that you have here. Let's say, for instance, cost of sales is going to have quite an extensive calculation. You will just write note 1 or reference 1, and then underneath your income statement, reference 1, cost of sales, and then you're going to do the calculation. It is important that you write down the skeleton, because in financial statements, there's quite a lot of information. And should you not be able to finish off in the set time limit your question, and you did not answer the question, so in this question, I want the statement of profit or loss. And let's say you've only done all types of calculations, and furthermore, you've written on top of your question, which I do not see, all the little adjustment entries that you would like to pass, then guys, you're not going to pass that question. So this financial statement questions is, well, 50% is knowledge and the other 50% is exam technique. So let's try and do them one by one. Now, obviously, I'm going to write a lot of notes on the question itself. But after you've put down your skeleton, your template, you can do a lot of these pluses and minuses on your answer itself. Included in insurance is an amount of 8,000 Rand. This amount was paid on 1 July 2012. Remember, we are now on 30 September 2012, and it represents the year's annual insurance premium paid towards one of the passenger vehicles owned by big traders. So immediately you can say, well, 8,000 Rand is an annual premium. So if I'm going to work out what it is per month, I can work it out 8,000 times divided by 12, and that then gives us a total of 667 per month. How many months was prepaid? Now we have prepaid this whole payment on the 1st of July. So that gives us a total of 9 months that was prepaid. So 9 months times 6667 equals then a total of 6,000 Rand. Prepaid expenses, guys, is an asset. The question doesn't ask you assets. They want, in the second part of the questions, trade and other payables. So in order to save some time, I'm not going to write down the full story of prepaid expenses debit, because I'm never going to use in this question the prepaid expenses. But what I have to do is, with that 6,000 Rand, I want to adjust my insurance. So if you had your template already written down, in your calculation, you would have had in brackets 27,500 less 6,000. Good. Next one. Rent was received for 14 months. Now here we have rent income 140,000. So 140,000 divided by 14 equals whatever, 10,000 Rand. And we have in actual fact received 2 months in advance. And that equals 20,000 Rand. Now that 20,000 Rand, obviously we want to reduce our rent income. So our rent income minus 20,000 Rand, but then we also know that the question in the second part wants us to have trade and other payables. So again, on your template, where you've already written down your template for trade and other payables, there it's advisable to say income received in advance, 20,000. And then you won't forget about that. Good. Credit note 278 for 27360 was erroneously left out of the debtors allowances journal, the sales returns journal for September. The profit markup on the goods was 50% on cost. Okay, so the amount was 27,360. I'm going to debit my sales returns, sorry, was 27,360. And I'm going to credit my debtors with 27,360. Now, although they haven't asked debtors per se, you should know, and if you read through your question first, as you should have done, that I need to do some adjustments to my debtors control account in order to work out what my allowance for credit losses is going to be at the end of the day. So therefore, I have to record this transaction. Now, important in this question, nowhere in the additional information, they tell us whether this is the perpetual inventory system or whether that's the periodic inventory system. But there are quite a lot of hints that you should have gathered in order to do so. Inventory there. They don't give me a year-end figure. They don't tell me what that figure is. They don't tell me what that balance represents. And because they don't tell me anything, it is the balance as in the heading indicated as at 30 September 2012. Also, do you see here, I have a cost of sales. I don't have purchases, I have cost of sales. Also indication thereof that we are actually working with a perpetual inventory system. So without me telling you so, you could have gathered enough information out of the question to know exactly what we are talking about. Because we are talking about the perpetual inventory system, it means that I have to adjust my inventory record with the cost price of the goods returned. So they give us my markup percentage was 50% on cost. So 27,360 times 100 divided by 150 gives us 18,214. What is our accounting entry? Our accounting entry is we're going to debit inventory again. Where's my inventory? With that amount of the value or the cost of stock that I'm going to take into my storeroom again. And I'm going to credit cost of sales. If I credit cost of sales is an expense account. So therefore, if I credit it, I'm going to deduct the amount of 18,240. Good. On 30 September 2012, 1653 was received from Walbach. Let me just see whether I've adjusted my sales returns. Yeah. On 30 September, 1653 was received from Walbach, whose account was previously written off as a credit loss. The amount was recorded in the cash receipts journal into the debtors column. So the bank was debited with amount received, which is right. And because it was in the debtors column, I would have created debtors with the amount received, which obviously is wrong. So if I've credited debtors, it reduced the creditors account. So I want to increase my debtors account, and then I'm going to write here credit losses recovered because they want the income statement from me. So this is an income item. Credit losses recovered with an amount of 1653. Once more, if you've already written down your template for your income statement, you could have, under operating expenses, written down credit losses recovered, and then in brackets 1653, maybe there's something more, maybe that's the only figure that you're going to work with. Good. Now, management is of the opinion that the allowance for credit losses must be adjusted to 2% of outstanding debtors. Now, what is our outstanding debtors at this point of time? Our outstanding debtors equals our 91,500 less 27,360. Now, you can see why it is so nice to write it exactly on the right line item, because now I have to do the calculation and I don't have to page forward and backwards and be all confused. What amounts should I add and deduct? So minus 27,360 plus 1653 give you then at the end of the day a total figure of 65,793. So that's the updated value of your debtors account. Now we can go straight away. There is absolutely no VAT in this question, so nothing is going to complicate stuff. And 2% of that 65,693 gives me a total of 1316. What I have to do now is to go and check whether we don't have an existing allowance for credit losses. And there we have an allowance for credit losses of 3,600 Rand. Remember, that's got a credit balance of 3,600 Rand. At the end of the year now, we want a credit balance of 1316. So therefore, we have to debit the allowance account and we're going to credit my credit losses or allowance for credit losses adjustment account with the amount of 3,600 less 1316, because that's the adjustment entry that we're going to post, and that gives us a total of 2284. So we have another income item that we want to add to our income statement. Credit losses adjustment account, and that gives us a total of 2284. Again, the question does not ask trade and other receivables. So we are not much bothered more than what we've done now with that 2284. We need this one purely for income statement purposes. A physical stock take was done on 30 September 2012. Inventory counted amounted to 1,225,000. Now, if we look at our inventory account, we also see that we have already made an adjustment. We have debited our inventory with 18,240. So if we're going to add that 1,197,500 plus the 18,240, we're going to see that the current balance on our inventory account is 1,215,740. We have, however, had a physical stock count, and that physical stock count equaled an amount of 1,225,000. So therefore, we're going to need to adjust our inventory with an amount of 9,260. Upwards or downwards? Guys, obviously upwards. So we're going to debit our inventory account with that 9,260. And we're going to credit cost of sales. We're going to credit cost of sales. We're going to reduce cost of sales with 9,260. Good. Now number 7. The entity employed 2 managers. One of the managers was only paid his salary for September 2012 on 3 October 2012, and no entry of his salary was recorded on 30 September 2012. Details in terms of his remuneration are as follows. Gross monthly salary 20,200, then his contribution to the pension fund, his contribution to the medical aid fund, his contribution to pay as you earn, and then his contribution to the unemployment insurance fund. So if we're going to determine what his net salary was at that point of time, we could have said, well, his net salary, 20,200, less all his contributions, gives us a total of 10,515. Now that 10,515, his net salary is going to be creditors for salaries as at the end of the financial year. Good. Big Traders also contributes on behalf of employees. Details are unemployment insurance fund on a rand by rand basis and pension fund contributions on a rand by rand basis. Now remember, the second part won trade and other payables, and this we're going to show a number of items. But we have to complete our income statement first. Gross salary, that is the amount that we have to add to salaries and wages. Gross salaries, 20,200 plus 20,200. Now they have separate accounts for the UIF contribution and separate accounts for the pension fund. Now remember, the UIF and the fund contribution and the pension fund contribution is all about the employer contributions. So those two. UIF on a rand by rand basis, so it's also 130 rand, and pension fund on a rand by rand basis, which is 1515. So yeah, UIF plus 130, pension fund plus 1515. Good. Creditors. Remember, we are also interested in creditors. What are we going to show as part of our trade and other payables note? We are going to show creditors for salaries, the net amount that we owe the guy, 10,515. So here, let me write it there. It's there. Creditors for salaries, 10,515. We're going to show a creditor for UIF, and that would be now what? It will be the employer contribution of 130, this one here, as well as that one there. So creditors for UIF, 260. Creditors for pay as you earn, 6540. And again, if you've written down your template, you could have put this directly on your template and it would have been completed. You didn't have to go back. Medical aid fund, creditors for medical aid fund, 1,500 Rand. And then creditors for pension fund would be 1,515 times 2, which gives us 3,030. Okay. Then Enika's going to go through creditors pension fund, 3,030. Okay. And then we're done with that one. The loan statement received from Capitec Bank indicated the following. Balance at the beginning of the year, 375,000. Payments made during the year, 195,000. The interest is the big question mark, and balance at the end of the year, 225,000. Now, out of this particulars, we can assume that interest was capitalized in the bank account, in the loan account. So the easiest to do that is by ways of a T account. Let me just get to the T account. Yeah. Opening balance, 375,000. Bank, amount paid, 195,000. That gave us the closing balance of the loan account, 225,000. So therefore the balancing figure on the credit side was the interest expense of 45,000. So if you have interest expense somewhere here, which I don't think we have, you're also going to add in your income statement expense 45,000 Rand. Write it down immediately in your template so that you do not forget that. Then number 9, depreciation on vehicles must be calculated at 10% per annum using the diminishing balance method. So vehicles had a cost price there of 550,000. It had accumulated depreciation of 102,500. So if we want to work that one out, it is going to be 550,000 less the accumulated depreciation of 102,500, and that you're going to multiply by 10%, diminishing balance method. We'll give you a depreciation charge there of 44,755. Again, you don't have it in your template because it's not part of that. It's a year-end entry. So you're going to add that. If you have your template already, you're going to write it into your income statement immediately. 44,750. The next one there is also about depreciation, and that is depreciation on equipment. Depreciation on equipment must be calculated at 10% of the cost. Take into account that equipment with a cost price of 22,000 was sold on 30 June 2012 for 14,000 Rand cash. The purchase date of this equipment was 1 April 2009. No entry relating the sales transaction was recorded in the records of Winbig traders. All right, now let's go to the calculation in detail. There was our depreciation on our vehicles. Now let's work out the depreciation and the profit or loss on the item sold. The cost price of this item was 22,000. I purchased it on the 1st of April. Now from the 1st of April to the 30th of September, that was the first financial year, the depreciation would have been for 6 months, so it's 1,100. Then the full 2010 financial year, 2,200, and the full 2011 year, 2,200. Guys, because it's a straight line method, I could have taken the shortcut and I said since the acquisition date up to the beginning of the current financial period, a total number of 30 months have expired. So therefore, if I take the cost price, 22,000 times 10%, multiplied by 30 divided by 12, would have given me accumulated depreciation as at the beginning of the year of 5,500 Rand. Good. Now for the current financial period. I've sold this item on 30 June 2012. So that means I've used that for a period of 9 months in the current financial period. That gives us depreciation of 1,650 on the item that I've sold. The carry value of this asset at the date of sale was 14,850. The proceeds was 14,000, so we made a loss on disposal of 850 Rand. And immediately you're going to write that down because you don't have an item for loss on disposal. So you're going to write there loss 850. If you've had your template before, you're going to put it into your template, loss on disposal of asset 850 Rand. Now the old equipment. The cost price of that equipment was 475,000 Rand. They haven't accounted for the sale as yet. So now we take out the cost price of the equipment that we've sold, 22,000, and that gives us a cost price of the equipment that I still have in my possession of 453,000. Depreciation is at 10%, so 10% of 453,000 gives us a total of 45,300. So the total depreciation on equipment is the 45,300 plus 1,650. So again, going to your income statement, you can write it in immediately. And there is plus 46,950. Okay. So that you have that total in your income statement. The following accounts for September 2012 was only delivered on 5 October 2012 due to the Postal Service strike and paid on the same day. Telephone 3306, so there we're going to add the 3306. And obviously accrued expenses will be on the credit side 3306. Water and electricity 6270. On the credit side, water and electricity plus 6270. That would have been accrued expenses. So the total accrued expenses that will be form part of your trade and other receivables or trade and other payables note would have been 9576, and you can put it in again directly if your template was available. Good. Now just to final check what our figures would have looked like. Let's start there in our income statement. When big traders, a proper line item heading for the name of the entity. Statement of profit or loss and other comprehensive income for the year ended 30 September 2012, 2012 Rand. Guys, don't forget those two because you're going to lose marks if you don't put it down. Sales would have now been, if I go back to the income statement, would have been my total sales of 705,7351, less my sales returns of 15,500, less the adjustment entry of 27,360. Cost of sales. Now, if you're going to go to our cost of sales, that would have been the original amount of 3275 less 18240 less 9260, and that will give us a total of 3247,500. So there, 3247,500. That gives us then gross profit of the difference between the two, 3766,991. Other income, rent income. Remember, there was 20,000 Rand received in advance. So therefore, the net amount there would have been 120,000. Credit losses recovered. That was one of those that we've written in here at the end of the day, the 1653, as well as our credit losses adjustment account against the allowance account, 2284. There we had that one, 2284. So guys, your life is much easier if you work as you go along. You're going to complete whatever the answer is. Loss on the sale of assets, that was the 850 that we've spoken about. Depreciation was this total depreciation, the 44,750, the 1650, the 45,300, in total 91,700. Rates and taxes, just like they gave it to us, there was no adjustment entries. Water and electricity, that was only plus the 6270 telephone plus the 3306. Insurance, remember there was 6,000 Rand that was actually paid in advance. So you're going to deduct the 6,000 Rand, that gives you 21,500, and there again minus 6,000, and that gives you exactly the amount that you have to work with. Salaries and wages, it was the amount that I gave you plus the 20,200. Employer contributions, here I've added everything together, the 4050 plus 130, 4,500 and 1515. If you go back here, you can see exactly salaries and wages plus the 20,200. Employer contributions was the 4050 plus 130, the 40,500 plus the 1515. Good. Audit fees, just like they gave it to us, there was no adjustments. The same applies to consumable goods, bank charges, and repairs. So total other expenses 945,150. Profit before finance charges was 294,5778, and then finance charges right at the bottom was 45,000. That we have calculated when we've done the T account. That 45,000 to give us the total for that amount. Good. Now, and that gives us then this net profit for the year. And net profit would be gross profit plus other income, less operating expenses, less my interest charge. That will give us then 2.9778. The B part of the question wanted trade and other payables. So we're going to start with the creditors control, and there was no adjustments that we've passed against the creditors control. There was the pension fund, let's just get there. Creditors control, 44,900. Our creditors for salaries, now here they have done a calculation for the net salaries, which we have already done here on our working paper, and that is the 10,515, so that was equal to the net salary that they still had to pay the guy. And then creditors for pension, that would have been the 33,600 that they gave us, plus the employee contribution, plus the employer's contribution. Medical aid fund, it's the amount that they gave us, plus the 1,500 Rand. Creditors for UIF, the amount that I've given us, 2,780, plus the entity's contribution, plus, there it is, plus the employee contribution. So all those pension fund, medical aid fund, and UIF had opening balances. So all you had to do, as well as pay as you earn, also had an opening balance. So all you had to do was to add the adjustment entries that we had to pass, that was these deductions and the employer contributions that added to those amounts. If you can remember, we have put it down here at the bottom. So it's that amount that we've shown, that amount has to be added to the UIF creditors, that amount has to be added to the creditors for pay as you earn, 1,500 Rand to creditors for medical aid, and 3,030 to the creditors for the pension fund. Then the income received in advance, that was the insurance, and if you remember correctly, we have put that down there at the bottom so that we don't forget that. Interest payable was a 45,000 Rand. It has not yet been paid, so that was a 45,000 Rand that we have established here in the T account, that 45,000 Rand. Then, accrued expenses, that was the telephone and water and electricity, and the total trade and other payables, 215,591.